Hi, this is going to be a little bit of extension of what Cord spoke about. Obviously, we understand the high demand of rental housing in the United States, but as Cord mentioned, there's a big gap between income levels in the U.S. And I want to talk a little bit about investing in affordable housing in the United States and how that might satisfy social impact goals. So let's see, there we go. This just shows you I'm going to give you a little primer on when we say affordable housing in the U.S. And what I'm talking about is capital A affordable. So that's regulated housing in the United States and how that came about. That in the early 1990s, U.S. passed legislation to privatize affordable housing. And when U.S. defines affordable housing as assets that serve people to make 60% of area median income, not average income, median. So, like, simple math experiment, Sacramento, California. Area median income is $100,000. So if you make $60,000, you qualify for affordable housing. Rents are initially set at a third of the income. So that'd be about $1,500 a month would be the average rents at these properties. And how they incentivize developers to build these is they provided tax incentives, tax breaks, and large fees. It pays a lot of fees to build these. And I'm going to get into that a little bit, how that actually ends up benefiting the eventual renter. But capital A affordable, if you think about this in the U.S., what it is it's about 50% of the market. Is that working? Yeah, it is. Geez. So if you look at the total market of the U.S., what Cord was talking about is about market rate properties are about 10 million or so. Subsidized housing, which I just mentioned, is about 5 million. And what they call NOAA, which is naturally occurring affordable housing. That's the workforce housing in the U.S. So that's housing that's probably the B and C properties that serve people that subsidized housing serves people that generally make about 60% of area median income. This serves people that make somewhere between 60 and 80% of median income. And then the market rate would obviously be the next tier up above that. Oddly enough, it's a big business in the U.S., the affordable housing, but it's very fractionalized. It's generally done by local developers who end up owning these for a long time. So the top 50 owners of affordable housing in the U.S. only have 8% of the stock. And there's some big names that own. Starwood owns a big portfolio, Blackstone.